Thanks for joining us at xm.com for this special report. I'm Christina Marujos, and joining me today is investment analyst Cristina Parthenido. We'll be having a closer look at silver. Cristina, silver is traditionally known for its strong positive correlation with the price of gold, but if someone looks at the charts now, that relationship seems to have changed after the peaks in August 2020, with silver trading sideways within a range and gold trending downwards. Do you think that deviation could hold for longer, or is it a temporary phenomenon?
Hi, Christina. Indeed, silver has been following the same direction with gold for many years now. To give a better explanation, when the gold price is rising or declining, a similar reaction is observed in the silver price because both metals are considered a safe place to put your funds when negative economic, political, and even health shocks like the pandemic surprisingly hit markets. Also, when there are rising fears that inflation will accelerate in the future, reducing the purchasing power of the currency that you own, then those metals can also protect the value of your wealth. And that is because their physical properties make them more durable than the paper money. Of course, gold is more durable than silver, but those previous metals are expected to rise when bad unexpected news affect the global economy, and the other way around. That justifies the rally to fresh multi-year peaks for both metals in August last year. So as you have mentioned, after that peak, the market structure for silver wasn't as bearish as the one for gold, and if you look at the charts, silver seems to have avoided the downtrend unlike gold, trading sideways instead, maintaining the higher lows from 2020. From a technical perspective, that creates some speculation that the rally in silver could see further continuation as long as it holds above its previous lows. Specifically, I expect any break below the area of $20.50 and $21.90 to violate the range in the market and therefore downgrade silver's outlook. Otherwise, I expect a decisive close above 28.30 to set the stage for another bull run, perhaps towards the 30 level, while beyond that, the next stop could be within the 31.8 and 32.40 region last seen in 2013. And on the other hand, the downtrend in gold paints a bearish outlook for gold at the moment, and although the price is currently heading towards the bottom of the bearish channels in around 1660, which suggests that we may see a rebound around that area, its negative outlook will not change until it rallies above the channel and more importantly creates a higher high above the $1,950 level, which is a long way above the current market action.
We are seeing a peculiar occurrence developing in the markets, Christina, where despite inflation risks, among others, safe havens like gold have not gained on that. However, fundamentals appear to paint a rosy outlook for silver. How do you see its price evolving moving forward this year?
Indeed, surprisingly, the rise in inflation expectations didn't bring gains to the metals, but there's an explanation for that. First, the rise in inflation expectations were mixed with the vaccine euphoria, and all that raised some strong speculation that the Fed will likely scale down its asset purchases and may hike its interest rates earlier than expected, and that consequently reduced demand for bonds and pushed bond yields significantly higher. Now, we shouldn't forget that metals don't pay any dividend or any kind of revenue, unlike bonds and stocks, so the opportunity cost of holding gold and silver while bond yields are rising is getting bigger, and that's why investors have likely reduced their exposure on those metals and looked for alternatives. Besides the inflation factor, there are some other reasons which could make silver a better investment than gold. Of course, gold is a more recognized monetary asset for central banks and will always be on the top of preference, but what is happening now is that the business world is shifting investments towards green projects, which because of the climate change, specifically the $1.9 trillion fiscal support from President Biden is expected to help at a large degree those investments, and he's also preparing a bigger infrastructural bill which will also benefit the smart and sustainable projects in the future, which silver will be an important component, especially in solar panels, mobile phones, electric cars, and the 5G network. So maybe not this year because the virus is expected to keep adding some support under safe haven metals, but probably in the next decade demand for silver may accelerate because of the green investments. So its supply is not abundant. Supply in several countries has declined from 2019 onwards, and silver reserves have also been diminishing. But in any case, a supply shortage and higher demand are expected to boost the price for silver. Now, whether silver can gain more than gold, that is a tough question to answer. Of course, silver is cheaper and more traders can afford it, which is evident from the boost that it got in January through the Reddit's Wall Street Bets group. But perhaps the silver-gold ratio could be a simple way to get an answer for that. The upside trend reversal on the silver has been coinciding with the peaks in the ratio at least the past two global recessions, and currently the ratio is well below its recent peak, but that doesn't mean that the downfall can see further continuation. Actually, technical signals are currently favoring more downward downside for the ratio. And if that's the case, then we may see more gains for silver.
Christina, thank you for joining me today, and thank you for watching this special report on silver here at xm.com.